Interest Rate Futures by Fiorella Daglio. The article that I used was called U.S. Treasury Market Holds Its Breath After High Drama. It all started on March 12th. That was when the U.S. Treasury market was brought to its knees. The banks struggled to handle a wave of selling from clients. Asset managers were dumping the bonds, searching for cash. The Federal Reserve Bank of New York tried to restore order, making $1.5 trillion in term repo available before the end of the week. Yields continued climbing the next day, and they were looking for a solution. The main issue was that what happened has never been seen before. Tenor saw spread between 5 BP and 8 BP, huge pricing errors. Trump Treasuries turmoil. President Trump's travel ban on March 11th made things more difficult. Plummeting stocks spawned a further wave of deleveraging and selling off liquid assets to close out positions. There is no certain event that explained any of this. Here is a graph that shows the implied and actual repo rates. It shows the decrease of the actual repo and the increase of the implied repo in March of 2020. Trump Treasuries turmoil continue. Futures have lighter balance sheet usage than cash bonds. Difference between cash earned from selling minus buying bond is implied repo rate. When implied repo rate is higher than actual repo rate, then there is an arbitrage. JP Morgan said this has happened more recently. Once the initial sell Treasury futures price pushed past bond prices. A rate strategist at the Second European Bank said, "I would say it's the movement in cash versus the futures that's causing an unwind in these positions and a spike in implied repo rate." Dealers appear to be full. Many of the dealers appear to be full in terms of how much risk they're willing to take on their balance sheet. Unwind of investors' leverage futures versus Treasury would result in Treasury supply stock. New York Fed data shows primary dealers had to cut back their overnight funding needs by $200 billion between September's repo spike and the turn of the year. Overnight repo exploded $190 billion in just 1 week. Overnight funding is horrible. The things that I have reflected and have seen and realized after reading this article and the module this week, I realized that it is super interesting to see what an effect coronavirus had on the market. Also seeing how drastic it really was. It is also interesting to see that everyone was super confused and did not know what was going on or how to control it. How the economy and companies are never prepared for stuff like this.